When I underwrite these deals with after repair value, I am predicting maybe a 1% drop every single month, and it might be less than that. So if I'm thinking 6 months out is when I'm going to refi, I'm going to look at today's comps minus 6% on it, and that's going to be my ARV just in case, right? If you prorate that, that's a 12% drop in the year. So a clear exit, being conservative with my numbers, ensuring that I cash flow from day one. I like to throw in some creative conditions whenever possible. So if I'm doing like a small multi, I want to be able to negotiate with the like it's two things. Either I negotiate with the tenants before closing and you'll give me cooperation. I still don't really like that because if I'm not able to negotiate successfully with them, I'm going to have to assume them my closing date. But the good thing about it is that if closing is 3 months long and I negotiate with them as soon as I get the offer accepted, by the third month, usually they're gone, or I'd have to hold them for one more month and then they'll leave after that.
Many investors are likely questioning whether completing a successful BRRRR or flip is even possible in today's market. Your cash flow and overall margins on deals likely look a lot different than they did several months ago. This week, we sit down with Austin Ye to talk about tips for not only surviving, but thriving in today's market. You're listening to the Black Wealth Effect podcast, where we're all about inspiring the next generation of Black Canadian real estate investors to succeed financially. If you're tuned in, that means you're hungry to take action and build wealth outside of your 9 to 5. We'll be sitting down with Black real estate investors, entrepreneurs, and allies to discuss a diverse set of topics to help you along your investing journey. Let's get started. You're listening to another episode of the Black Wealth Effect podcast. We're your hosts, Mario and Ron. Please like, comment, and subscribe to the show on your favorite podcast streaming platform. Also, if you haven't already done so, check out our new Facebook group, the Black Wealth Effect Network. Our guest this week is someone who we consider one of the young OGs in the real estate investing space, Austin Ye. Austin, welcome to the show.
Things are going well. You know, I don't consider myself an OG. Like, I remember when I was starting off, the people I would look up to were like Mike Rosehart, Matt Pichet, Kellen James. But yeah, I guess so. I feel like an old man when I get called an OG.
That's great to hear, man. And actually, firstly, I'd like to say thank you. We love to shout out both our supporters and those that inspire us for everything we do around the show. And so everything you do with the Rise podcast and the community are like one of the main inspirations behind this show. So shout out to you for that.
I appreciate it, guys. And I see you guys are keeping the movement going. So let's keep it rocking and rolling.
For sure.
Yeah. Let's jump right in. So just to start, we like to get to know our guests a little bit and allow them to kind of share a little bit about their background. But for you, like, as I said, you're obviously a successful investor in the short time that you've been investing. If you were to go back in time and do anything differently or share advice with yourself back when you started, like what advice would that be and why?
Yeah. So I guess I can share how I got started into investing and if there was anything to change, what I would have changed. So I found real estate investing, like probably many of your audience, via Rich Dad, Poor Dad, where it's very conceptual, but nothing really practical for you to take away from. But it was the initial mindset shift for me to dig deeper into it. I dabbled around in stocks, never did very well at that because I was looking for, I guess there were like without any leverage, there's not any significant amounts of money that you can make from stocks, especially if you're starting with like a smaller cash starting point. I was trying to find different ways to produce income because I wasn't very passionate in my full-time 9 to 5 job. And then I ran across real estate investing via some YouTube channels. So I watched a couple of videos and I thought, you know what, this seems easy enough. And I jumped right into it. So when I got started off, so a lot of investors talk about analysis paralysis and just getting stuck in the research mode. I was the complete opposite. And it's maybe something that I would have changed a little bit, but also I'm very fortunate that I jumped in the time I did. So I watched a few videos, almost did no other due diligence other than that, and just jumped right into buying my first property. So I set up a meeting with a random agent, a listing agent of a property. So I didn't even know which realtors to be working with and the due diligence process around that. The realtor took me down to Windsor, or I guess I met her in Windsor. She took me to 5 or 6 different houses, said, okay, which one do you want to buy now? And me, again, not knowing much about anything, I was like, I guess I got to buy something. So I chose the cheapest house of that lineup. Again, didn't know too much of what I was doing. Not closed on the property, but went firm on it. And then I introduced myself to the investor community. I started going out to networking events because I was like, oh my God, I have this property. What am I going to do with it? Let me try to network with some other people. So I kind of did it ass backwards. If I was starting off investing again today, and I think a lot of people are probably already doing this, is to build that network of investors. So you have someone to lean on as you go through that journey. If I didn't have those investors to lean on that I met in Windsor, I don't know how successful I would have been, right? Because when I had questions, when I needed mentorship or guidance, there were the people that I could speak to. So just surrounding yourself, and it's pretty cliche, but just surrounding yourself with people who are on the same journey as you, and people who will support your growth. And that doesn't, I know for a lot of us, we follow a ton of social media influencers in the real estate space, and everyone tries to grab the social media influencers time. I can tell you there's a lot of people in my DMs, but that's not really the people that you should be reaching out to, right? Like you should be reaching out to the people who have maybe 1 or 2 more properties more than you, who are just slightly more experienced, but can still, they have the time to build a stronger relationship with you, right? Because the reality is when you're trying to reach out to these people with 10,000 plus followers, it's going to be very difficult to build any sort of genuine connection with them because you have so many people reaching out to them, right? But yeah, so that was a huge learning lesson for me is that I wish I jumped into the community a bit earlier. It helped me get through my first investment property when I had any questions. Like I had knob and tube in my first property, didn't know what the hell that was. So I leaned on other investors to get me through that experience. But at the end of it, I was still able to refinance. So I did the burr, pulled my money out, and kind of scaled from there.
Oh, that's great, man. Appreciate you sharing that. And like to your point, I agree. Like it truly takes a village, and like focusing on building that network early on, extremely important.
Mm-hmm.
That's great. And so you touched a little bit on obviously the impact that social media has and the influence that it has on folks that are looking to get started and experienced investors as well. What I feel like doesn't get shared enough on social media isn't like not only the wins, some like the great deals or great burrs that you've done like over your investing journey, but the challenges as well, or the pitfalls. And so for you, like, is there a deal that either you recently already wrapped up or you're going through right now where like you faced major challenges, and like what were they? And then like what were some of the learnings that kind of came out of that as well?
You know what's so funny? I had a meeting today at lunch with Diana, investor girl Diana, if you guys follow her on Instagram. And we're talking about this exact same thing, about the challenges and obstacles, and not enough people share them. And when they do share them, it's not even that serious of a challenge. Oh, my renovation went like 2 months longer. Well, big deal. Every single person's renovation goes 2 months longer. Right? That's not a true obstacle or a challenge. So I'm going to get into some like challenges that really tested me and really made me question myself why I am investing in real estate. One of the biggest challenges for me, and this is going to be the first time I publicly speak about it because it's been dealt with, but it is like during that entire time I was going through it, man, it was torture. So I purchased a 4 unit with a JV partner in Windsor. Fantastic deal, a great price, cash for keys, all of the tenants. They were all drug users. So they probably took that money and they spent it on drugs. Then COVID rolled around. If you guys remember, during COVID, there was a rule in place that there were no evictions to be had for the indefinite future, right? Yeah. So during the termination date, that was the eviction period of when they needed to be out. They never left. Then they got posted an eviction notice from the sheriff, but then that got postponed again because there was still an indefinite, like there was no evictions allowed. So they were staying there rent free. And what ended up happening is that, so the house went on fire one day. I got a call from Mayu. And then Mayu, it was like 11 p.m. and Mayu, I didn't pick up. I was sleeping. And then Mayu called me again. I was like, okay, like if you're calling me 2 times at 11 p.m., like something super serious is going down. And then he's like, yo, the police department just called me. Our house is on fire. I was like, oh my God, this is,
Wow.
I didn't even know what to do. Like first and foremost, I was like, is everyone safe? Right. But no, like it was just so fresh information. So everything was a question mark. There's an uncertainty. The house is on fire. We are made aware of it. They're going to put the fire out. Let's see what's going to happen. So that was a sleepless night. At 7:00, I reached out to the non-emergency police department to get an update. And they said that, yeah, the house is like totaled, like completely burned down pretty much. And I went on Google and I searched for our address and I saw like a bunch of news articles on it. And then one person actually passed away. And I was like, oh my God, I could not wrap my head around this. And I was just like, I had so much guilt. It's like, is there anything that I could have done? Like, what caused the fire? Do I now need to get a litigation lawyer, right? Not litigation lawyer, sorry, what criminal defense lawyer, whatever the case is, like, is there any sort of negligence? Is there something wrong with the property that would have caused a fire that had someone passed away? Then a few days later, it was announced that someone else passed away from the fire in the hospital. So 2 people passed away. And at that point, like, obviously, like I am having sleepless nights and like, I'm just thinking, is there anything that could have been done to change the situation, right? And then also speaking with the lawyer as well, being like, okay, like what do I need to do to prepare myself in case this does go to trial or court? And it was some sort of negligence. That being said, in about like 2 weeks later, so the fire marshal had an entire investigation, the Ontario fire marshal, on the property, turns to find out that some crazy guy lit the house on fire, likely because of some sort of beef with one of the tenants there. Because again, it was a drug house. Like every single unit was a drug user, right? And there are always squatters and people going in and out. So yeah, that was something that really tested me. And during that entire time, like it wasn't even a financial burden. It became like more of a like feeling like you're at fault and that guilt for someone's death, right? But the arsonist went to jail. And then from that, like this is the next entire shit show. It's like, okay, like it made me, okay, like it's a bad location. It made me realize not to invest in bad locations first and foremost, right? Location. And that's the craziest learning lesson. Not even a financial loss. It was like way more than that, right? Huge burden. So on one hand, that side got resolved such that I knew that there was nothing I could do to prevent the situation. An arsonist came, probably had beef with someone in the building and lit the whole house down. The other struggle was insurance. So insurance really does not want to pay you out, right? And that was another learning lesson that I had. Just because you're insured doesn't mean that they're just going to give you your money. They're going to drag this process along as long as they possibly can. And they're dragging their feet for like nearly a year or over just about a year. And at the year point, if the case doesn't get resolved, then they don't have to pay anything out. So they were not responding. So then we had to hire a lawyer on retainer to like give legal threats to them to respond because they were dragging their feet. And it was just a very slow process. And the day before we got our payout, the day before the year mark, right? And we're just like, oh my God, this is like too stressful. So that was a year of stress. And during that entire point, it made me question about investing in real estate, right? I think the biggest learning lesson there is that one, from a tenancy point of view, tenants have a lot of rights, right? So if they were evicted as the eviction date that the sheriff would have came, no lives would have been lost, right? But because of whatever the regulations are, there were lives lost. It was not a vacant property, right? So that's one thing to be cognizant is the tenant laws, right? Things don't always go on as planned on the tenant side. Another thing is location. I can't stress enough that you want to invest in a good location. And even if you choose to not invest in a great location, just make sure the current tenant quality is okay, because something like this, it's an extreme case, but I realize when people talk about risk mitigation, that's a risk that pops up in my head now, right? Like if you're dealing with some drug dealers or people with previous criminal history, I Google every tenant. Like one of the tenants, had I Googled them, I would have saw he had a breaking and entering past, just like you see a bunch of news articles on him, right? So that's another thing. Like be careful and understand and know the tenants you're inheriting. And then with insurance, they're trying to pay as less as possible. So it's almost always a good option to hire a lawyer on board when you're going through an insurance claim as big as that one, because the lawyer's going to try to maximize it and fight for you. But that is the biggest loss that I've had so far. Yeah. a lot to go through.
That's a crazy story that you shared with us. I feel like us as investors, there's always that one challenge that makes us question why we even do this. And those are some great takeaways that you shared with us as well. To make sure that we do our due diligence, location, and even that tip with the insurance, I had no idea. So that's a big tip.
Yeah. That was another thing, not to screw around with insurance, right? Like I chose one of the cheaper policies. So the payout was good. Like we have no mortgage on it and we have a vacant piece of land. So like if we sell the land, that's all gains, like in terms of from that point of view, but like not to cheap out on insurance as well, right? Because if a situation like that happens, again, extreme situation, but I realize that it can happen now. You don't want to be stuck with the shitty policy.
Yeah. Thanks for that tip, man.
For sure.
And just to move on a bit to talk about, the state of the economy right now. I mean, prime is at what now? 6.75, I think. Prime,
I think it's 6.75. I'll Google that right now.
That is
crazy.
That's
your
crazy.
HELOCs are well over 7%.
100%. So that is crazy to even think about now in 2023. Cash flow is tighter. The margins are slimmer now. So we have to be really particular with the deals that we look to close on, right? How do you go about completing a successful BRRRR flip in today's market from your perspective?
Yeah, I wish. So I like to lead by example of things that I've actually done. So I am going through a couple of BRRRR processes right now, but for a lot of investors, the big question marks the appraisal point of view. So I won't be able to give you like a firm example until I get the appraisal, but I'll let you know the due diligence I did to take down this deal and what I'm thinking through my head, and whether it pans out or not, who knows, but I'm wishful that it will. So one of the big things for me is that when I'm doing a deal, the numbers need to make sense off the bat. It needs to cash flow from day one. If it's fully tenanted and it's all under market rent, still needs to cash flow on the interest rate environment that we're in today, right? If it doesn't, forget about it. Second thing is that I need to see a clear exit, usually within 6 months, ideally less than 6 months. I feel like the longer you are in the market, the more exposed you are to the fluctuations, especially with the uncertainty of everything going on. Now, that being said, I don't think we're going to be seeing the price drops that we did in 2022 in May, June, July. Like the market was dropping 5-10% every single month, right? It was dropping pretty significantly. That was because at that point, you had a lot of buyers who, at that point, it made sense to buy your property first and then sell your primary after, right? So people got caught up in transactions and you had to sell. There were a lot of motivated sellers that had to unload. So property prices were dropping pretty significantly. That segment of the motivated sellers have pretty much diminished at this point. We might be looking to pre-con, but that's a totally different story on its own. But I don't think those big price drops are going to happen. That being said, when I underwrite these deals with after repair value, I am predicting maybe a 1% drop every single month. And it might be less than that. So if I'm thinking 6 months out is when I'm going to refi, I'm going to look at today's comps minus 6% on it. And that's going to be my ARV just in case, right? If you prorate that, that's a 12% drop in the year. So a clear exit, being conservative with my numbers, ensuring that it cash flows from day one. I like to throw in some creative conditions whenever possible. So if I'm doing like a small multi, I want to be able to negotiate with the like it's two things. Either I negotiate with the tenants before closing and you'll give me cooperation. I still don't really like that because if I'm not able to negotiate successfully with them, I'm going to have to assume them by closing date. But the good thing about it is that if closing is 3 months long and I negotiate with them as soon as I get the offer accepted, by the third month, usually they're gone, or I'd have to hold them for one more month and then they'll leave after that. Or I try to throw in a condition that says, this is conditional on me negotiating cash for keys with the tenants within 10 days, right? So I have 10 days to negotiate as many cash for keys as possible, and I can choose to waive or not, right? And in either case, if I'm able to get 2 or 3 of them and I still don't want to do the deal, I mean, the homeowner, I just increase their value for free. So they're okay with that a lot of the times.
On that note, like how receptive are sellers now, like just based on your experience in allowing that clause around being able to negotiate cash for keys?
No, it's not always, especially if it's conditional on it. I think the biggest pushback, which is very valid, I would say the same thing. The biggest pushback is, what if you don't close the deal and the tenant stop paying rent because they got pissed that you negotiate cash for keys? I'm like, yeah, very valid, right? There's not really a rebuttal to that. Whereas when you negotiate it prior to closing, but it's not conditional on that, they're much okay with that, because like if they stop paying rent, a lot of the times I say I'm going to pay the rent if they don't pay it during the time from now until closing, because like I was going to close on the deal anyways, right? That being said, they're much more receptive on stale listings, but not as much with new listings. If something is out for a day or two, usually they're not that motivated to jump on too many unique clauses, right? So I try to look for things that have been sitting on the market for a while and try to get creative on that end of things. And lastly, well, I think that's the main thing actually. Like it was ARV. I'm conservative on that. Needs to cash flow from day one. I need to be able to ideally turn over the tenants or have the ability to turn over the tenants prior to closing. And from that, that's how I'm looking at executing bursts, or just being extraordinarily conservative. And just with one of my deals as an example that I'm doing right now, fourplex in North Bay, I turned over all the units, closed on it on December 8th, I want to say. And then someone just bought it off of me yesterday, clean offer, for $100K more than I purchased it for, just by getting rid of the tenants. So I was like, I could do the renovations and then cash out refi, but I'm happy with whatever profit it is. So I just sold it off. And then there's another deal that I'm doing right now where it's like a 5-unit in Windsor. Windsor was trading at a 5.5 cap rate when I was purchasing it, but I'm using a 6 to 6.5 cap rate when I analyze the deal, right? So just being extraordinarily careful with everything. And if it pans out better, then perfect. But if not, then I'm okay with the worst case scenario.
Yeah. I think you have to be comfortable with your worst case scenario. And I think for me too as well, that was one of my big criteria. It has to cash flow from day one, or else, it just doesn't make sense, right? Because interest rate after it's been like 6 months now of hikes. So yeah, it has to cash flow at day one for me as well. Mm-hmm. And you touched on cash for keys. I'm curious, when you implement this strategy, because I know for me, I've done it on a deal before where I negotiated with the tenant. I even negotiated with the owner to pay half of the fees as well. And then come the day of closing, they didn't want to move out.
Yeah.
So that was annoying. Do you usually get them to sign it? Let me pose the question a different way. Do you usually start the filing of the LTB forms at the same time? So like the L6 or
the L3? Yeah,
L3, right?
I will try to file it as quickly as possible. It depends, right? Like I'm a cheap I don't know if I'm allowed to swear. I'm a cheap bastard.
All good.
A lot of, I know the filing fees are not much, they're just a few $100, but what I do is like really quickly you get a sense of whether they're going to move or not.
Yeah.
Because like for me, I constantly follow up with them and I help them. I'm like, hey, did you check out this place? How is it going? Do you need a reference letter from me? What do you need on my end? Like it's like almost speaking like with a seller on an off-market deal. I do consistent follow-up and I just make sure that everything is okay. And when it's easy to tell, like, oh, like they're not really taking this too seriously, they're going to give me a little bit of trouble, I'll file it then. Okay. I don't file it all immediately. I usually have a good sense a week or two in. But I think one way to mitigate that in the future is to be involved in the search process, right? Because a lot of the time, especially with like middle-aged tenants, they don't know how to use Facebook Marketplace. They don't know how to use Kijiji, or like very simple things. For us as investors, they don't think through it because they're not on the investing side of things. Like, for example, like one of them had cash for keys for $5,000-$6,000. And I was like, look, like your credit may not necessarily be the best, but if you can make 5 months up rent rent up front, a landlord may be able to foresee that mediocre credit score. And they never thought of it that way, right? So you kind of have to be involved because a lot of tenants will not necessarily look at it from a problem solving perspective, and understandably so, because their life's turned upside down. They have to move, so they're not thinking like fully logically throughout all of the different scenarios. So I feel like that's almost like our responsibility to transition them.
Yeah, I think that was my problem too. I kind of cheaped out. I'm like, they'll go. I had that sense because they made it seem like they were on top of things. Like they were looking, oh, I'm going to be moving out soon. Don't worry. So they were giving all these reassurances. And I'm like, all right, why spend the money and then, not get it back? Well, it's usually a hassle to get it back. So I'm like, why spend the money? And so I think
best practice is like people should don't take the advice that I'm giving. Like you should always do it. Like,
100%. Yeah.
It's for me, like I have a little bit more experience. So I have like my gut instinct that is usually right about those things. But if I wasn't so cheap, I'd do it all the time.
Yeah. Yeah. So, you regularly touched on it earlier, the economic factors and trends that, tend to impact the real estate market. Right. For a new investor, how do you recommend that they stay on top of these macro trends that impact the real estate market? So I don't know, like what are your top articles and resources, your go-tos? What would you suggest?
Yeah. I want to preface by saying I am by no means any sort of macro expert. I just sometimes find it engaging to learn about it, but I am not an expert, right? But some of the resources I use, believe it or not, Twitter is a big one. A lot of these economists do have Twitter accounts. So it's really easy to digest the information they have there because it's limited by the amount of characters. So sometimes they'll have a thread with like 7 or 8 tweets, but it doesn't take any longer than 5 minutes to read, right? Like you're not going to get like the super in-depth analysis from it, but you can follow the Twitter accounts that with economists that you like, right? Yeah. So that's one way. Another one is I listened to a podcast called The Looney Hour. I actually went to the live recording session one time. There's like two, I think one of them is a macro economist. Another one is an investment fund manager or a fund owner, something like that. And then another one is a real estate investor and agent, but with a lot of macro economics, not background, but like they do a lot of readings on the macro news, right? So it's very interesting to hear their takes because you have one investor, you have one on the equity side of thing, and then you have one that's like more of a macro strategist, right? So you hear them have interesting conversations, and it's Canadian based as well. But they don't only talk about Canada. They talk about like global economics and how it'll trickle down to impact Canadian economics and real estate as well. And what else do I do? And yeah, like I would randomly just like search what's going on in Google. Like I just will randomly just read up on things. I think those are the main ones for the most part. CIBC actually had a live, if Benjamin Tell, some of your listeners may know him, chief economist in CIBC. He had a live Q&A and session about 2023 outlook. So when something like that comes up, I will give it a listen. I think you just kind of have to make an effort. It's not very interesting stuff, to be honest, right? But like you have to kind of naturally be engaged and inquisitive about these sort of things. Yeah. If you're not, it's going to go one ear and not the other, right? Yeah. But when you're invested in real estate, it's almost engaging because you're like, oh, like, how is this going to impact my net worth or like my next move? So like, that's why I found it interesting. It's kind of like, it allows me to think through what my next steps and decisions are going to be and what risk factors there are there.
Mm-hmm. Yeah, no, those are all great tips. And to your point, like if you want to be successful as an investor, like you have to be invested and staying on top of those trends, right? Actually, on that note, like just in terms of kind of next steps and kind of outlook for the year, like what are some potential like risks or risk factors that investors should be mindful of, like as they think about trends for the year? And then I know you touched on it a little bit when you talked about like how you're approaching a bird today or a flip, but like your overall investment strategy, like how have you had to pivot or will pivot this year?
Yeah. So one thing that I am a little bit worried about are job losses and how that may impact the tenants' ability to pay. We've been seeing job losses mainly within the tech sector. Maybe it bled out to some other sectors as well, but it's for the most part, the job market is still very strong, right? My concern is that, and most people will tell you, most economists will tell you that interest rate hikes usually take 12 to 24 months, 18 months, whatever it is, to pan out into the economy to feel the full effects. And our first rate hike was, I believe it was March 2022. So based on that, we technically haven't even seen the full impact of our first hike yet. So what is that going to be? I'm just speaking about it from a business point of view. When you look at, like, you guys are working at companies right now, if your company, let's say, is struggling, they're not going to lay people off right away. They're going to give it a few months, see if there's anything to do to pivot, to try to get revenue up. They're going to try to lean out on things, and then they'll eventually let people go, right? So I don't know, like, that's the biggest question mark for me is the unemployment mixed with high interest rates, and that could create a whole new wave of motivated sellers. That being said, Benjamin Tal, obviously much smarter than all of us investors, right? He's privy to more information than us. His kind of outlook on the job market is that he thinks the recession, it will definitely lead to some job losses, but more so it's going to impact the vacancies. Because right now, if you go on LinkedIn.com or Indeed, there's so many job vacancies, right? Still, a lot of companies are hiring. If you look at the jobs report, like, what, we had 100K plus jobs, even though we're estimating like 10K or something like that, right? So we're still blowing past it. So there's still a lot of job openings. Benjamin Tal thinks that it's not going to be masses of layoff. More so, it's going to be, there's going to be less job vacancies, right? So it's going to be a more balanced market, because it's not healthy to work in a new job and then in 6 months switch over to another job and get like a 10% pay bump. That's like inflationary. So that's one thing that I'm worried about, though. Like, if there are job losses, how is that going to impact tenants' ability to pay? And how does that obviously impact my bottom line? So going off of that, one thing that I've been doing differently is that I've been trying to get rid of some single family homes in my portfolio, just because I feel like that's the highest risk where it's available. If one tenant doesn't pay, I'm fronting 100% of the cost there. Whereas when I'm looking at even a duplex, if one tenant leaves, at least I have another tenant covering some of the cost, right? But more so, the more units I have, the more safer I feel. Because, like, again, you have other tenants there that are going to be paying rent still. So that's one of the big things I've been shifting towards in 2023 is to do less single family homes and more smaller multis, where I can diversify the income among multiple people.
Yeah, those are pretty good tips that you shared there, especially with the job losses. That kind of keeps me up at night as well. So it'll be interesting to see how it pans out over the course of the next 12 months.
For sure. And you just think about it, when people were buying in 2021, I don't know what the stats are. This is just anecdotal, right? Yeah. But just kind of from what I've been hearing, when people were buying in 2021, more so even 2022, the beginning of the first 2 or 3 months, there were like 4 people on title. You'd have mom, dad, the kid, and the other kid, right, to stress test and qualify. If one of them lose a job, would you still be able to qualify? Probably not, right? Yeah. So, like, even if one of those 4 lose a job, how does that impact their ability to make that mortgage? So just some things that I constantly think through, for better or for worse. I also don't think it helps to be overly negative, right? You got to, like, even though, like, if there's negativity, you kind of have to see the silver lining and find the opportunity in between it. Like, if I think the housing market's going to crash, my opportunity is I will short housing. I will short REITs or whatever's publicly traded in housing, right? Like, there's always opportunity. So, like, yeah, I don't like to be overly pessimistic, and I am still bullish on real estate in the long term. It's just like I want to be prepared for whatever headwinds that may happen in the short term. By the way, another interesting thing, I know I'm jumping all over the place, but a couple of banks have called the bottom of the market in 2023. I don't like the prediction game of what the bottom is going to be, because they get it. Man, if you saw the predictions for the 2020 housing prices when the pandemic first came, like, every single estimate was wrong. Like, I don't think anyone got it right. So I don't like to go off of predictions, but just an interesting thought. TD said the bottom's going to be, I think it was in Q2. Benjamin Tal said the bottom's going to be in 2023, and he expects a recovery by 2025, not like to all-time highs, but prices starting to come up again. So yeah, we'll see.
Yeah, Tiff Macklem even made some bold predictions, and I don't even trust him either. So
after what he said to us about rates being low forever.
Right? So yeah, I'm like, okay, we'll see. I'm not gonna. I don't even care at this point. We'll see. But since we're talking about predictions, obviously no one has a crystal ball and knows what's going to happen in the next coming months. But what do you think? What do you see? What do you think is going to happen in the next 6 to 8 months? Do you think we're going to fall, continue that decline, or we're going to pick up a little bit of steam next 6 to 8 months, even 12 months?
Yeah, that's tough, right? I don't like doing predictions because I'm also not the most. I'm definitely not the most research person as well. Like I will do research, but there are people out there who probably know way more than me, right? Kind of the summation of my thoughts is that there's two perspectives, right? Boots on the ground is kind of not forward, but like you speak with different realtors and you figure out what's actually happening because it doesn't always get captured in the data. Sometimes data is lagging, right? And news articles are definitely really lagging a lot at the time where they blow things out of proportions. Right now, in the last 2 weeks of January, multiple offers have come back in some properties, not in all properties, but I was speaking with the realtor yesterday on Windsor. His showing had 40 listings in a few days, which is unreal. In December, when I had my property listed in Windsor, I didn't have 40 showings. So things are definitely changing right now. Now, is this change going to be permanent or not? I don't think so. I think it's more so because buyers are getting tired of waiting on the sidelines and they're sensing that there's going to be kind of a stall in rate hikes, which is what Tiff has actually said, that he's probably going to stall it unless there's something that happens where he has to increase it or whatever the case is, right? But he's going to stall in the meantime. Where's it going with this? Yeah, so I think people are slowly entering back, but there's not enough listings because sellers are still holding off, and that's a very unique dynamic, right? If you had a flood of listings, I don't think things will be as steady in price wise. Yeah. The next hurdle is spring market, because spring typically you have your listings shoot up, and I do expect listings to go up in spring just based on sellers that I speak with who don't choose to sell off market. They're planning on listing in spring. Let's see if the demand's going to be there to keep up with it. Because the reason why our housing market hasn't fallen, I wouldn't say hasn't fallen off a cliff, but hasn't declined as much as it could have is because the dynamic is so tight. You still have buyers, not as much, but you still have some buyers wanting to buy, but you have almost no listing on the market. And most listings are just terminated listings that get relisted again and again and again. So you don't have a flux of new, fresh inventory, right? So we'll see what happens in spring. That will be the next sort of challenge for the housing market. So I'm interested in keeping my eye out on that. That being said, I don't think that prices are going to go up this year unless they cut rates, but I don't think they're going to cut rates this year either. I know the bond market is saying that they're going to cut rates, but I don't know. I feel like if they cut it too fast as well, and there's some pent up demand, it might have inflationary effects in housing and other assets as well. So we'll see. I think prices are continuing to decline, not at the rate that we saw before, but decline such that we could still take action, because it's not going to be unpredictable decline, right? It's not going to drop 20% this year. If it does, then well, shit, I think a lot of us are going to be in trouble. Yeah. But it's predictable enough for us to be conservative and still make aggressive moves, right? Yeah, and I'm keeping my eye out on job losses. What else is there? Inflation is dropping. I don't know. I'm just going all over the place. It'd be interesting to see what happens with inflation as well, because China is going to be reopening, and that's inflationary pressure too. Yeah. So I don't know what's going to happen in inflation. Maybe there's going to be a rise in food and energy prices in the summer. That being said, just to summarize what I'm saying, because I'm kind of all over the place. Housing, I still think it's going to drop, because I think that's what most people care about is housing. I think it's going to have a decline this year. Not what we saw in 2022, just a little bit more steady. I think there's going to be good opportunities this year for those who are constantly putting out offers and taking action. And that's what I plan to do is I'm planning to get a little bit more aggressive in 2023 and throwing out offers and getting some deals under contract.
Yeah, I totally agree with you there. We can't pinpoint, what direction it's going, but
no one can time the bottom.
Exactly.
You can't. It's just not, But you got to put in what you're okay not to lose. The thing is, housing, the housing downside is limited because you have a tangible asset, right? Like you got to put in what you're prepared to keep tied in the property. So if you're only okay having 100K tied in the property, maybe don't spend 150K on renos, 100K in down payment and hope to burn it out. Because if you don't, then you're in for a lot more money than you were planning to.
Yeah. And no, it's not the time to take that added risk either. So
exactly. Yeah.
And I know, Austin, that just to switch gears a bit, I know that you're a huge proponent of coaching. What are some tips you may have for a new investor who's looking to, jump into the market at this current moment, or looking to just level up from just maybe one property,
Yeah.
What, if they're considering coaching, what kind of advice you would have for them?
They're considering getting a coach?
Yeah.
Okay. Yeah, I would try to connect with those that in the program, and try to connect with some of so a lot of coaching programs are large, and you're going to have those shining stars that everyone knows this person's associated with this program.
Yeah.
Right. But you almost want to do your due diligence and get into the average person who is in the program. Because let's be real, the people who are out there branding themselves being a part of the program, that's probably the top 10%, right? But you still want to network with the 90% and figure out what the true experience is like, because not everyone's going to have a similar sort of coaching experience, right? So if there's a coaching program you like, network with people who have taken that program, right? And try to network, like keep on building those relationships. Try to connect with people who have only been in the program for 3 or 4 months, right? Because some people want to only talk with people who have completed the program. No, like try to talk with people in all levels. It'll give you a good perspective of what you're getting yourself into. Because nowadays everyone has a coaching program. It's a very lucrative income stream. So I'm just seeing them pop up everywhere. Yeah. So you got to be really careful. And also you got to figure out what goals you have for yourself as well, right? Like if you want to do multifamily investing, some coaching programs may not be as relevant. That being said, I don't necessarily think that you always need a coach. If you can make the effort and show up to as many networking events as you can yourself, you're going to build those relationships of people who are more experienced than you, such that they provide mentorship, right? It's not going to be formal mentorship. You're not going to call them out of the blue and be like, I need advice. It's going to be all formalized and stuff like that. But if you go out to enough networking events, like you're probably out networking with people every week or every other week, that's enough to get guidance just through having those many conversations, right? So coaching is expensive for people. It makes sense for some people, but I think that if you're not doing the bare basics of listening to podcasts, reading books, watching YouTube videos, and going to as many damn networking events as possible, then you're honestly just kind of throwing money at coaching without like treating the actual problem, which is your work effort.
Totally agree.
Facts. And definitely wise words to live by. Thanks for sharing that.
For sure.
And so this brings us to the interview. Austin, thank you so much for sharing your experiences, insights, and answering the tough questions as well. I know we had a couple in there, but thanks so much for joining us.
Appreciate it, guys. And again, like a fan of your podcast, love what you guys are doing. Keep it up. And if you guys are not going to say it, I'm going to say, give this podcast a 5-star review. Because it helps keep Mario and Ron motivated.
Facts. Thank you for the plug,
you
man.
beat us to it.
There you go.
Yeah.
There you go. I had a great time, guys.
Definitely.
Yeah, and to our listeners, thanks for tuning in to another episode of the Black Wealth Effect podcast. Catch you later.
Peace.
What was the one thing you heard today that inspires you to take action? Now plan to take that action in the next 24 hours. If you're looking for more support, ideas, or just want to connect with others like you taking action, join us in the Black Wealth Effect Facebook group. The link is in the show notes. Thank you for listening, and we'll catch you next time on the Black Wealth Effect podcast.